joining me from the Schwab Center for Financial Research. Michelle's the Director of International Research, and Nate's the Director of Derivatives Analysis. Afternoon, guys. We've had a kind of an internationally focused afternoon here, Michelle, talking stock picks around the world, talking about dollar strength. What's top of your mind when you're thinking about kind of the post-cuts next couple weeks of trajectory for the rest of the world?
Yeah, I think the move in the dollar is kind of interesting. We saw the dollar initially sell off on that slower U.S. CPI yesterday, and then he kind of gained back some ground after the Fed pushed out rate cuts. Today, I think we might be seeing a little bit of flight to safety. We have some chaos in the French politics happening. President Macron announced a snap election earlier this week, and it looks like maybe Le Pen's RN party could win the prime minister spot later this month. And the reason markets are paying attention here is, Moody's actually said it well. This is a little bit credit negative because we can see this increased fragmentation within politics there that would mean a harder time in reducing the fiscal deficit from 5.5% last year to 3% by EU rules by 2027. And so, we're seeing some French bonds sell off, yields rising, hurting some of the French banks. But I would note this is not European debt crisis 2.0. There are not calls to leave the euro, and banks are better capitalized than a decade ago. But, we're just seeing a little bit of this protectionist sentiment also that means, that could slow growth and increase inflation.
That's a good summarization for us market participants who are on the outside of that looking in, and maybe offers also, too, some explanation for why some of those reverberations that might be showing up in the dollar with such strength despite some soft data here. Nate, when you think from a U.S. equities perspective, there's times, of course, where geopolitics and global stuff is going to have a major role here. Do you feel like we're in one of those moments right now? Or does the AI stuff just give us this giant shield to do our own thing?
Yeah, we might be a little bit immune to a lot of, look over the past 4 years, how much, headlines we've been hit with or events, geopolitically speaking, that, it's not that they're not significant, but in terms of the shock value that it might impact a market, I think that's certainly lessened because of the frequency that they've occurred. Having said that, if it has ripple effects within, credit or yields, that would be a different story here. But net, I think you're right. The AI, you can look at what's going on with, this narrow leadership going to semis, going to mega cap tech. That's primarily where the money is going. Look how bad industrials and some of those other former leaders, so to speak, maybe some rotation is coming out of that and kind of chasing a little bit the money from the momentum trades that have been going on within technology. And you get a report out of Broadcom, and that just kind of helps fuel some of that momentum that we've seen recently.
A fresh catalyst. Who knows? Yeah. Maybe if Adobe surprises this afternoon. Seems like the bar there is real low. Michelle, tomorrow we've got the Bank of Japan. Seems like no matter what they do, the currency just keeps getting hit. But the stock market generally keeps going up. So should we just expect them to stay with the style and momentum that they've been applying so far?
Yeah, they're going to go at a slow pace. We're likely to see the Bank of Japan pare back the pace of QE tomorrow, so a little bit more tightening, and they're getting closer to hiking again. But, it's really at a very slow pace, and it seems as though what the Fed is doing or not doing is having a bigger impact. So unless the Bank of Japan can surprise by being more hawkish than expected, the yen is really queuing off the expectation for Fed cuts. And that's also impacting Japanese stock performance in the near term, more so than what's happening in Japan.
And China at the same time, does it look like any of their measures have helped firm that economy up, Michelle?
Yeah, deflation has disappeared. Exports have rebounded, but it's really still an unbalanced economic recovery. We're seeing strength in manufacturing, but consumer spending consumer spending is restrained because consumer confidence is low. And that really goes back to the property market where prices continue to fall. And that is just a headwind to consumer confidence and spending. But it is slowly recovering. Chinese stocks are off the lows, but it's going to be a slow go.
Speaking of consumer confidence, we've got our own sentiment tomorrow morning. We got a couple Fed speakers. Nate, you think tomorrow we get any action into the weekend? It does kind of seem we're in an awkward place. We were celebrating Wednesday morning, and now we're kind of treading water.
Yeah, treading water. I just think that, maybe a little bit of buyer's exhaustion here. I mean, sure, we're at 2-month lows today on the 10-year and the 2-year, and it's kind of like one of those algo type of near-term programs that, from an efficient market hypothesis scenario, if you assume that the S&P is taking in all relevant information, that includes the Fed and rates and everything else, and that if we're at 2-month lows now, then theoretically, at least you would think that that begets at least some kind of a thesis as to encourage further buying. So, if we continue to see yields move down on any of that commentary from the Fed, given the PCE data that came out this morning, certainly I think that could provide some upside lift. But, we're at a 79 RSI on NVIDIA, 77 RSI on the NASDAQ composite. When NVIDIA had its key reversal day that resulted in a 20% correction back in March to April, the RSI was 83. That's just a point of reference. It's not a timing mechanism. But the next catalyst beyond that, I only see is basically Micron earnings on the 26th for the chip AI story, and then on the 28th PCE, which could be a boon for lower yields. But we still have some space in between now and then.
Okay. Good stuff. Good analysis. Like the levels and the charts to watch, and always like the international view to keep us on our toes around the rest of the world. Thanks, Michelle Gibley and Nate Peterson.